Hey all, welcome to ShareTreck. This is Raj here. I think I'm a bit confused about what's going to happen. On one hand, I'm hopeful that based on the pre-market action, we might probably get the opportunity to retest the supports which were earlier resistance that we broke through. If that happens, I would not be too hesitant to get into the market. But right now, it's not very clear at 20th of September, 6:53 a.m. in the morning when I'm making this video, what's going to happen to the market when it opens. So I'll keep it short, but I'm looking for signs to give us an idea of which direction it is going to go, assuming that the market experts know what they are talking about. So that said, let's look at the disclaimer and then get started. So here we are in the headlines as always, and the points that catch my attention are Anthony Scaramucci says he's working alongside Kamala Harris on her campaign's crypto policies. So now it seems that both the parties are pro-crypto and they are taking keen interest in crypto. This should be doing very well for cryptocurrency. So that's the first point I have. The second point I would like to talk about is Huawei's phone is proving popular among Apple iPhone fans in Beijing. Remember, this phone was unveiled at the same time as Apple 16. So this is very important and we have to watch the valuation of Apple to see how the market reacts to this news. We'll check out the pre-market action also. That may give us some kind of a clue. Then I'm looking at another very big headline from my perspective. It's that market bull Tom Lee hesitant to jump into this post-Fed rally. That supports our current thinking that I am having that last 2 weeks of September and the month of October have been historically weak. So that's the one set of information that makes me a little bearish at this time, little cautious. The second information that makes me a bit cautious is that we had seen in my video that whenever the Fed starts a rate cutting cycle, the stock market falls. And we took the example of 2001 and 2008. In both cases, the stock market fell down with every subsequent rate cut. So currently, I think there is this toss-up between believing whether we are not going to have recession and the soft landing has been achieved, and the feeling that maybe the 50 basis point cuts is an admission of the fact that we are going to have recession. So if recession is the conclusion by the market, then I think that like 2001 and 2008, with every rate cut, the market has to continue falling until we have neutral rates and then boosting rates. So those are the thoughts that I'm having. So I'm absolutely confused. I'm going to sit on the sideline. I want to hear from you guys. Now, let us go on to have a look at the economic calendar and see what is happening out here. So here what I'm looking for is the rate decision by Bank of Japan, because if Bank of Japan had increased the rates, then I was thinking that there could be a second leg of the yen unwinding trade and the markets would come down. But it seems that Bank of Japan has not reduced the rates, because you can still see 25 basis point as per the forecast. And here I have the Reuters article which says Bank of Japan signals no rush in raising rates again and keeps policy steady. This basically means that the fear that I had, one of the risks that I had in my mind, which might take the market down, is no longer in play. So that much more bullishness or that much less bearishness in my stance. Now I'm looking at the stock market heat map, and what I see here is that consumer defensive has lost a lot of funds from its section, except for Costco. Walmart definitely suffered a lot. Household also suffered, beverages suffered. So these are all things that do much better during a downturn. Utilities are also doing bad. You can see this utility section here, it's mostly red. So there could be a little bit of rotation happening out here. So one of the theories that is doing the rounds is that big tech and AI are still in the flavor, but many participants are taking some money off periodically from big tech and AI and moving them into small caps and other areas where a lot of upside is still forecasted. And so basically it means that there's going to be a little bit of rotation here and there, but the overall story of AI and big tech remains intact. It's just that it's not going to be jumping as aggressively as it did before when it was attracting all the funds, because now with the rate cuts, there are other opportunities where there is a possibility to multiply the money faster with lesser risk. So that is being adopted periodically by market participants. So we should look at a little bit of volatility coming through. And of course, today is the options expiry, so we'll see a little bit of action from there as well. Now I'm looking at the Nasdaq futures here. It is down minus 0.47%. So that to me is a little bit of a red flag. It's pre-market action, but yesterday also we saw a drop in the momentum, and MACD continues to remain bullish, but the drop was a bit steep, not as much to my liking. So there is a good possibility that we might be coming down and we might be testing the 9-day exponential first, and then we have this diagonal line of support. So I want to see some supports being tested. So I'm more comfortable if we test this diagonal line of support or the 9-day exponential average and bounce back up again for me to put some money back into the market. Now let's look at QQQ. QQQ stopped just below the resistance that we have at 487.20, and we had a doji candle, as I remarked yesterday, that it's a indecision candle. So this morning we see that we are down minus 0.36%, that is 1.74, and we are below yesterday's candle body. So definitely we are opening up a bit in the red. However, yesterday we had higher momentum, and MACD was also bullish. So this is a mixed bag right now, but pre-market action definitely shows bearishness, and it's around 7 o'clock in the morning right now. I don't know if this will persist, but the number 0.34% negative is pretty high to be surmounted very quickly. Now I would like to go and have a look at what's happening with gold. See, gold is going back up again. When we had seen the market spike up, we had seen gold go down. Now let us look at the VIX, where VIX is pre-market. The VIX is up 0.31%. It's at 16.39, still below 20, so I'm not too much worried about it. Let's go and have a look at the AI stocks. Google is down 0.12% pre-market. Tesla is down 0.54% pre-market. Apple is down 0.55% pre-market. Meta is down 0.36% pre-market. Amazon is down 0.25% pre-market. Microsoft is down 0.31% pre-market. AMD is down 0.64% pre-market. Palantir is down 1.82% pre-market. FNGU is down 0.95% pre-market. Broadcom is down 0.81% pre-market. Oracle is down 0.24% pre-market. Micron is down 0.44% pre-market. Cloudflare is down 0.46% pre-market. And we have NVIDIA down 0.80% pre-market. Qualcomm is down 0.90% pre-market. SMCI is down 0.39% pre-market. ARM is down minus 0.91% pre-market. ASML is down 2.13% pre-market. Intel is down 0.66% pre-market. FNGD is up 1.13% pre-market. And then we have SMH, which is the ETF for semiconductors, down 1% pre-market. So this is the story. Everything is looking bearish pre-market. Now let us go and have a look at what is happening with our genomic stocks. PACB is down 1.96% pre-market. IMTX has got no trades pre-market. Bluebird is up 6.62% pre-market. DNA is down 0.48% pre-market. Prime has no trades pre-market. Allogene has got no trades pre-market, and it's still within this range that we have, the channel that we have, bull channel. Iowa is got a flat position pre-market, and mRNA is up 0.04% pre-market. Beam is up 3.11% pre-market. Intelia is down 1.44% pre-market. Editas has no trades pre-market. Altimmune is down 0.40% pre-market. Caribou Biosciences has no trades pre-market. CRISPR Therapeutics is up 0.97% pre-market. Bionanogenomics has no trades pre-market. ArcG is down 0.82% pre-market. Grail is up 2.74% pre-market. Looks a bit encouraging because it's catching hold of the 20-day exponential moving average, which is this orange line that is out here. So we are just on top of that at the pre-market trading. Then we look at Illumina, which is down 0.22% pre-market. It was a huge gap up yesterday. We are still much higher than we were before, and I think we are still marching towards our cup and handle target of 157.83. Verve has got no trades pre-market. Well, friends, that brings me to an end of this video. From the evidence that I have seen so far, I think that first of all, the risk of markets falling down has reduced a little bit because the Bank of Japan has decided to stay cautious and has held the interest rates. So a yen carry forward trade unwinding is not on the books at this point of time. So that's one risk off. The second risk remains that after rate cuts, the markets have always fallen if the markets have perceived that we are going into a recession. So right now the verdict is still out on whether we have a soft landing or we are in for a recession, especially with the 50 basis point cuts. Once the market makes up its mind that it's a recession, then it will go down. If it makes up the mind that it's a soft landing, then it will go up. That is my feeling, and I think that we'll get an answer to that when we bounce off one of the supports that we have in QQQ and SPY. So until that point of time, we cannot be sure. The third point I would like to make is that historically the last 2 weeks of September and the month of October have been the worst. So I don't see any reason why it should be different this time. Therefore, I'm staying cautious. I'm going to stay on the sidelines and watch what is happening. I would like to hear from you guys. What do you think? Was it a bull trap yesterday, or is today a buying opportunity because it's a minor blip and the markets are going to resume upward? Please give me your feedback and share your thoughts for myself as well as the ShareTreck community. Thanks and have a great day. I'll catch up with you again. Bye for now.